Hey guys, welcome to the Deep Dive. Now, if you're just joining me, this channel is all about diving deep into stocks history on some of the stocks that have had amazing explosive up moves and looking at what those stocks looked like, what their earnings looked like, what their news looked like before that happened so that we can learn how to spot it happening in real time. Now, if you're looking for the quick fix, if you're looking for the, what do I buy today? This isn't really the channel. This is a research channel, and you're getting to kind of come along with me as I learn this, and hopefully this will be useful for your trading as well. So today we have a stock that we're going to look at that is one that you're probably very familiar with. It had a run only recently that started in late 2020. It's called AEHR, and it's a semiconductor. So I'm going to share my screen, and we will start talking about it. So AEHR, technology, semiconductor, equipment, and material. They primarily design, engineer, and manufacture and sell test and burn-in equipment for use in the semiconductor industry in North America, Asia, and Europe. Provides full water contact test systems, test during burn-in system, test fixtures. So they're basically equipment for semiconductor producers. They were incorporated in 1977, so they've been around for quite a while, and they are incorporated here in Fremont, California. As of today, they have a market cap in the 300 million, so they're still a pretty small stock. But AEHR has made one of the most amazing runs recently, and if you got in at any point, you probably did very well. So this is what we're looking at. Oh, my picture's a little screwy here. Let me just fix this. All right, sorry about this. All right, so AEHR, this is what we're looking at. This is 2020 when it starts, and you can see this is the COVID panic. So we're kind of late. We're in September of 2020. The stock has been going sideways for a very long time, which is always good. I'm finding a lot of these bases, they do start from sideways action. They don't start from V bottoms, at least the ones that I'm choosing, although there were quite a few V bottoms from this March 2020 low. So you can see it's just kind of messing with the 200 moving average. During this period, our ADR, which you can see right here, is going 6, 5, 4, 7, 7, 10, 11, 13. So, I mean, it's a fairly volatile stock. We're going to zoom in and just kind of get a sense of what we're looking at here. All right. So it's pretty choppy, not like the last video, which was so freaking orderly. It was nuts, but it's pretty choppy. Earnings are pretty low, as you can see. Because this is in 2020, we're going to get a chance to go back in time with Thinkorswim's on-demand feature to see if there are specifically episodic pivots that maybe we could have taken, which is, when a stock gaps up on really high volumes on usually earnings, but it can be other news, and it changes the stock's character so much that you can actually buy on one of those days, and sometimes it will run quite a bit after that. So you can kind of see where we're at. They tried to run it up here. That failed pretty rapidly with the March, the COVID madness. And then we've just kind of been chopping up. So this was really not a stock that showed a lot of relative strength. Like, I was trading during this time, and there were stocks that were rocketing higher, that were actually making new highs. And so this wouldn't necessarily be on your radar. It's up 100%. So, but it's low priced. The volume is very low. 100,000, 50,000, you have some big days here, 974,000. So I want to look at this day here. This was the earnings on, let's see, that was 7/16/20. So they were probably reporting like May earnings or something like that. So that was this here. For some reason, this was a very positive earnings report. It was falling from the previous year. So quarter over quarter, there was no growth there. It went from a positive 2 cents to a negative 3 cents. Sales fell as well. So not particularly inspiring, but the market kind of liked it. We had a really nice pop higher, and it's come back down. So that's kind of the context that we're going into this. There is a huge volume pop in here. I mean, we went from 14,000 days, 30,000 volume days, all the way up to almost 1 million shares. So this could be the signal of a change of character in the stock. So, all right, let's keep going and let's see what happens. We're under all the moving averages. Wow, we're having some real weakness, down to 140, which just tells you, the initial reaction to this earnings report was just wrong. I mean, it's still in the dumps. We're having an earnings day here. So this is in September, so they're probably reporting maybe August numbers here. I mean, they could have been reporting here. No, that was definitely May. So, I mean, I guess they're reporting August numbers. So, I mean, we're looking at this. It's looking bad. And this is not a stock you want to be in. Obviously, negative 200% versus the previous August, negative 1 cent down to negative 9 cent. I don't know how they calculated that. That doesn't seem quite right. Revenues are continuing to fall. They're even this is the surprise column. They're even surprising worse than what their guidance is. That's how bad this stock was looking. So maybe there is an element within this stock of, man, the numbers were just so bad that any kind of turnaround was going to be good. So let's keep going. Let's look. Made new lows, rejected those new lows. All right. So there's a little life in there. Nope, not so much. Going to new lows even more. Wow. All right, but this low here was an area of buyers around 120. It's coming back up. This isn't the NASDAQ, and something about the NASDAQ stocks, if they get below 1, NASDAQ threatens them with delisting. So a lot of companies will fight like hell to stay above 1, which is pretty interesting. All right, we're getting through the short-term moving averages, and we're dealing with the longer-term moving averages. And there we go. All right, so this is what I like to see with a 200 period moving averages. I've said it in previous videos that I don't like flags that are underneath the 200 MA because they usually fail. But in a situation like this, where you have a flag underneath the 200 MA and you get a big gap higher on huge volume, that is a situation that is actually pretty good because you're showing bursting through all that resistance, all those sellers in the 200 area, and you're getting just a lot of follow through here. Obviously, it closed about half down on the day, but we're going to see if there was some news on 12/3/20. Let's see. 12/3/20. Okay. Received an initial $4.3 million order from a new customer. Oh, I got this stupid crap. Basically, they got a new order from a customer for $4.3 million. Where was that? Right here. Fox XP test cell. Not really sure what that is, but it was good news. So this was probably an EP you could have taken. It set up well. It had a nice little kind of flag here. So and then the volume was the highest volume, 9.3 million shares. So this tells you right here, man, this stock is changing character. Like this is it's going to be different from this day on. This stock actually could be making money now. People are they're interested. So we're looking for really any kind of flag, short flags, any kind of consolidation we want to get long. Have an inside day, which is good. Kind of see it better if I make it bigger maybe. Another inside day. Another inside day. So this probably is showing up right now as an hourly flag. And you could buy over 217, 218 for maybe a pop to the highs as an intraday play. It's not really something we're interested in on this podcast, just on this YouTube channel, because we can't really go to the hourly. I mean, we could. It'd just be a lot of work. So, but that is a potential play. And yeah, it might have worked. You could have done this day trade. I mean, it opened up here, went up to 230 or so. So 218 to 230, 12 cents. You could have done a day trade. All right, we came down to the 10. And now, because of this volume and how explosive it is, I'm definitely looking. I'm going to buy a break over this kind of bearish candle here. If you can see it, this bearish candle, I'm going to buy a break over there. We had a super tight day. I'm actually going to buy a break over that super tight day. So let's do a little bit over it. 209 is going to be my entry. So I'm in. My stop is 202. So I'm risking 7 cents here. Let's see if we get stopped or what happens. No, we're looking great. 209, so we already have a 1R winner. I'm going to get rid of probably 25% at 220 the next day. Okay, so we're at a 25% at a nice 220. So that was a nice, what did we get at? 208, 207. So I don't, we got 13 cents or so. We're risking 7 cents. So yeah, we're looking good. Okay, we got a sideways action there. I'm going to take the next 25% off on the next day. Yeah, so at the open, it was like 215 or so. So nice profit, right off the bat. We got a 1 hour trade on half of it. We're just going to let the rest run. I'm going to move my stop up to probably break even, maybe 209, maybe 208. So about break even. Nice, looking good. Looking real good here. All right, we're trailing it with the 10. Whew, went below the 10, went higher. See how it reacts to that. So it's starting to slow down a little bit. I wonder, maybe we should zoom in just a little bit more. Oh no, what are you doing to me? Zoom in just a little bit more. That might have closed below the 10. 239, it closed at 240. Did not close below the 10, but I'm moving my stop to be 231. No, we're still going. We have earnings the next day. We have a 50% position. So this is potentially kind of risky. I'm moving my stop up to 237 probably. And I wouldn't sneeze at taking off another 25% at the close. So let's do that. I mean, I know the candle's already printed, but don't always know when the next earnings day is going to be. And for me, I'd want to get down to at least a third position. So let's take 20% off at the close. So 20% at 254. And remember, we got in at 209-ish with a 7 cent stop at 202. So 7 cents risk, and we're up like almost, 50 cents. About 45 cents or so, 46 cents. And so very nice. Down to a 30% position. Let's see what happens. So we would have got out at the open around 228, gap below our previous stop. So a little bit of a bummer on how that stock ended, but this can happen with these really strong runners. You can get big gap downs, especially on earnings. Let's see, earnings was 7 cents. It says there. When was this? This is one. So they're reporting probably December numbers. Let's see. No, they're reporting November numbers, and my number, Thinkorswim's different than this. 40% loss. Revenue just looks awful. I mean, they surprised negative 48%, negative 75%. So, I mean, just really bad numbers. Kind of throwing the whole Minervini, like, your earnings are slowly going up and then cresting and then coming down, and the stock's kind of doing the same, but shifted forward a little bit. Kind of just throwing that out the window because this stock has crap earnings so far. But we haven't even made new highs yet. New highs are up here. So let's see if this down move gets followed through. It's going sideways. It's coming right back. Tested the short-term moving averages there. Can't get above it. Gets close above it there. It's either going to follow through here or come down. It's going to follow through. All right. Looks like we might be. Oh, no. There we go. Whoa. Wow. So was this a flag that I missed? It could have been. You could have kind of looked at this as a flag. It was really ugly. It was 35 bars, but hot diggity damn, that's an up move there. It wasn't tight before that flag, which kind of sucks. I mean, it kind of has this long, it's a little hard to see, but it kind of has this long down bar. So it wasn't really tight that you wanted to get in, but all right, going sideways up here. and we did make new highs. Stock is very volatile. ADR is 8, 7, so it's a volatile stock. Coming down. So back into range. That breakout failed. It went below this bar, so that was rough for anybody who got long there. But we weren't in it because it was ugly. That might have been a good entry though. Stopped it out 2 tight days, and we popped right back up. This extend to the right. This trend line is actually working really well. So that entry there was like 250. It's just moving really fast. Came back down. Let's see if it stops these people out. No, but it had a really bullish kind of close there. It went back down and closed strong. I'd be really surprised if it came. We could actually put a trade on. Let's buy it 259, and we'll have a stop below this bar at 246. So we'll do a 13-cent risk and 259 entry. All right, we're in. Ha ha! Okay. Breaking out to even new highs. 13-cent risk, 259, and it hit 311. That is some hot diggity dang. That's a nice move. So let's give it a day or two to see what happens. We're going up. High volume. This is a tough situation to be in. Do you take profits? I mean, this thing obviously bursts higher and then comes right back in. Earnings haven't been great. They're not giving you a lot of confidence. What do you do here? What do you do? Give me a comment. What do you do here? I think I'm getting out of 50% at 350, or I'm getting out of a quarter at the close of the next day. Okay, so I'm out. You can't even see that basically. The close of that day was 313. Really nice, 25%. Got another quarter of the trade to get out of before we start trailing it with these moving averages. Let's see if we can get 350 on that last quarter. Oh, did we get there? High, 345. No, I'm getting out of the last quarter on the open the next day. Okay, the open was 319. Okay, so not bad for the first quarter. I mean, 359 to, our exits were in this 315, 317, 312 range. So really nice trade so far. We're going to trail the last half with the 10 moving average. Whew, came down, touched that 10, rockets higher. Oh man, right back down to the 10. Oh my gosh, this thing is so volatile. Well, technically we didn't move our stop up, so we did get stopped out here at 301 at the end of the day, but we had to sit through it going almost all the way back down to our entry at 264. Would you have been able to do that? I don't know. I probably would have moved my stop up to about 294. In real life, I would have moved it up to about 293-ish and gotten out there, which wouldn't have been all that different than the $3 that we took as the exit. So, all right, we're out. Let's see if we can get another setup. All right. It's just amazing how these moving averages work so well to tell you when the chop is coming. I mean, we got out here. We got out on this earnings day and it was just choppy for a while, and then it had another run, and then we got out and now it's choppy for a while. Ooh, thank goodness. Those moving averages saved our behinds. All right, so that big down move came down, violated this little low here that was on low volume, so probably not that important. This was really the blow off top of the move, and let's see if we get another setup here. All right, we're rallying back. The 20 is sloping down. The 10 is below it. So, oh man, just having really big candles. This trend line is a champ. Giving some support. Or not. Goes down to the 100. First time we've touched the 100 since its initial big volume, now I'm on the world stage breakout. And we're into March of 2021. Do you remember it? Did you trade then? What were you trading? All right, that's actually a little bit of a breakout. We're riding this 100 up and then we're breaking higher. Let's remove this drawing. We're breaking out above these, but we're still below the 50, and I wouldn't personally want to take it, although we might clear that any day. Okay, hit the 50, kind of pulled back a little bit, not that much. Tried to get over again, pulled back. This stock should go down, so if it doesn't go down, that's showing strength. Main market, I mean, there's not much to say about it. It's just going one direction. So let's keep going. Earnings the next day. So definitely going to take an EP. If we pop up to like 3, that's definitely EP material, I think, for this stock. I mean, this is, well, I should, not really. Because we know this stock is going to run, we're interested in an EP. But if you were just looking at this stock, would you want to take this as an EP? Well, you'd look at past EPs. This EP was not an EP. This was a failed, this failed, this failed. So you're kind of like, I don't know if I want to take this. But we'll see. Let's see what happens. All right, we gap down. Let's see what the earnings. So this was in April. So they're probably reporting early year. They're probably reporting February numbers here. Again, negative 2 cents. Past quarter was 2 cents. So down 200%. That looks more right. I don't know why this is 200%. That doesn't make any sense at all. But you can see their revenues are still falling, but not as much. Now we're only down 13% and negative 20%. So this is definitely starting to turn around. It's less bad, and you can see what we have coming. So we are building a range. Kind of interested in it over 273. It would be nice if we got a little bit of tight action to set that up, but we're just going down. Are we going to hit the 200? We are. We're bouncing off the 200. All right. Coming right back up. All right, there's support around the 200. Big buyers stepped in here, hit all these moving averages. It's just a mess. All this whole area is just a moving average mess. So we're not going to mess with it yet. Ugh, just ugly. Trading all over the place, breaking the 200, closing below it. Nope. Man, is this just messy. This is just, look at this. This is just mess. Messy. All right. Maybe we made new highs there, and we're actually holding above the 100. That would be an hourly. That would be an hourly flag there that you could take advantage of over 285. Nope, it failed. See if we go back into that little range there. Although now it's riding the 10, so that's really interesting. We went from riding the 200 to riding the 10. So that tells us that maybe buyers are coming back in. The volume in these 2 days was decent. It wasn't massive, but it was decent. Yeah. That's not a bad little flag. Above all the moving averages, riding the 10, I say we buy above 275 with a stop below 258. So about 17 cents there for risk. Okay. This bar is perfect. It basically gives us a risk bar. Range on it is 14 cents. But yeah, 273, stop below this low at 257. Not bad. Not bad. We could take that. But we're breaking lower. That flag did not work out. And now it's underneath the 10. The 10's coming down. It actually found resistance at the 10. All right, maybe now we kind of get some sideways action and we get an actual setup here. That's good first sign. Sideways, but not tight. Okay, breaking out of that little range. That is mysterious. That is a weak breakout. We should see it come down. When you get a weak breakout, you should see that come down. If it doesn't, there's much more strength there. Went sideways. It's actually holding that gap up. I say we buy at 282. We got one sideways day. Hopefully we get one more, but 282, let's go for it. All right, that's perfect. So we got another sideways day. We're going to buy above 280. So it's like 281. It was stop below 265. So 16 cent risk. Well, good thing. High was 278. We did not get filled, and that was just a barn burner of a day. Just canceled out all of this stuff. So we should get follow through lower, right? I mean, that's very weak. No, we're right back in it. All right, let's see if we go sideways. Oh, man, just brutal. New highs in this little consolidation. We broke out to the lower end of the consolidation. We broke out to the upper end. A lot of times stock will now come back to around 273, and we'll see if that happens. Yeah, it did. So earnings are the next day. And the EP looks much better than it did here. Now we've been going sideways for a decent amount of time, from mid-February to so almost 5 months. So now any kind of gap up in here, I'm definitely interested in buying. Like so. All right. So let's see this day. This is 7/16/21. So I'm going to write that down, and we're going to go back and look at it. EP, first big profitable, big one in a while. And then what is it? 5 months of consolidation. Yeah. All right. And volume is ginormous. 78 million shares. 78 million shares. This is the EP you want to be in. It has this little tail here, and I really hope that it was possible to get into it. Probably not on the 1 minute opening range, but maybe on the 5 minute opening range. All right, let's see how it does. If we had this EP, we'll act like we do, and let's see how profitable it would be. Oh my goodness. 139 million shares. So this earnings, let's look at it. I think, so this was July. They would have been reporting these May numbers, and this is why it's gone absolutely bananas. Went from just negative to 100% growth in revenue, 233% growth. Although when it has this hashtag, it doesn't know quite how to calculate it because it's going from a negative number, but we went from negative 3 cents to positive 4 cents. So just an amazing bump in profitability there. And the stock is just going ballistic. I mean, what do you do here? How do you trail this? I mean, because it could go all the way back down to 3 in an instant. But let's go one more day. All right. So it's been 2 days. I think we're going to get a little pop back up here, and I'm getting out of 30% around 6:30. All right, so I got out of 30% around 6:30. Still have 70% in the bag. Let's say 25% just to make it easy. So a quarter at 6:30, and we're still going up. It's so volatile. Okay, come back down to 6. All right, we're really coming back down. We're trailing it with the 10 for sure. Okay, we're bouncing at the 10. Not a great bounce, though. Really not very an impressive bounce off that. Wouldn't be surprised if we undercut this and went lower. So I'm trailing the rest, 75% at 5. I mean, we're in at like probably 3-ish, so that's a 2-point gain. So hopefully we don't get knocked out, but all right, my stop's below this open. This is a big day, huge volume. My stop's at like 480, let's say. Hopefully that keeps us in. Okay, we're rallying. That's good. I'm going to take off the other quarter here at the open of the next day, just so we're down to a 50% position. All right, so we opened at 586. Okay, so we got out of a quarter at 630, another quarter at 586. So that's around $6 from our entry in the 3. So I mean, we got a double on that first half of the trade. And I don't know what our stop was. We're going to go back in time and look at this EP to figure out what our stop was. But we're in really good shape. Stop on the rest is still at like 480. All right, we broke the 10, so technically we'd have gotten out at the end of this day at a close of 562. So too bad, but let's just see if maybe it sets up here. I mean, this is looking like a flag. It's getting really tight. So I mean, we just had a strong up day and a weak close, so it should go lower from here, but not really. Okay, I like this. Maybe it comes down to the 20. Man, this is getting really nice. It's getting so tight. I mean, this should not be this tight. This is a mistake for the traders who are in this. We're going to buy over these highs at 621 because it could easily pop up to like $8, you know? Oh, yeah. There we go. So we're in. Stop below these lows at 570. So, I mean, 621. So we got like a 50-cent risk. Getting out of 50% at like 742. That's not a good sign. Did we get stopped out? Low 570, low 575. We did not get stopped out. Almost. Let's see. Let's give it one more day. Yikes. Low 5.71, and the low of this is 5.70. We got 1 cent away from getting stopped out, so I think we're getting stopped out for sure. Yeah, we got stopped out. So took a loss there. That's too bad. But this flag is still intact. If it can get below 530 maybe and stop some people out, that would be nice. And we could put a re-entry up a little bit high. But we're so profitable on this. Like taking one loss is really not a big deal. All right. That was a good sign. So reset. A lot of people stopped out there. EP people are out. All right. We're getting tighter. I like it. If we get a wedge pop, I'm interested. 595, I'm buying. If we pop above it, 595 I'm buying because nice. It's going up. It's not really riding any moving averages, but it is having these higher lows. Oh, we're at 30 minutes already. We're going deep. All right, good. 595. High was 593. Didn't get in. All right, still 595. Okay, we popped up. We opened at 611. We came down to 582. I don't know. Looks like we opened there and ran higher. Would we have bought there? Maybe, maybe not. This is just looking real tight, though. I want to buy maybe above this inside bar. Yeah, let's use this inside bar. High is a buy, low is a stop. Oh, we just popped up. Very nice. That definitely is a buy right there. I mean, that it's like, man, opened higher, kind of came down and then closed strong. Let's say we're in with a stop below the lows at 651. Looking good. First day. Yeah. Ooh. All right. It's really struggling though. I'm going to get out 50% at the open of the next day. That was good. 50% out at 649, so maybe a point profit there. Stop still below that low at 654. It's staying strong. There we go. All right. All right. Trailing it with the 10. Yeah. This was a little hard to get into. I mean, this was really a wily. It had a false breakout there. It had a wedge pop there. If you bought this, that was definitely a buying day, and it worked. Just trailing with the 10. Okay. Went below, closed above it. It's holding it very weakly. Okay, made new highs. Earnings are the next day, so definitely getting out of another 20% on the close of this day, which would be 1582. That was a very nice trade from 6 to 15, so almost a triple. But yeah, we'd get out. We wouldn't want to be long into this earnings. So we have 30% position into this earnings. But the earnings was great. Now, would you want to take this EP after this big run up? I don't think you would. This is not this EP. You don't have this nice big base. So we're just riding it with the 10 at this point with 30% position. Yeah, we would have been stopped out there at 12.6, and that was not an EP that you wanted to take. I mean, it stopped you out. So, all right, let's see. Came back down to the 20 and bounced. Ooh, making new highs. Was this a flag that we should have taken? Not really. No tightness. Real short. I mean, 7 bars or so down to that low. Probably wouldn't have taken it, so we're not in. But we did have that nice winning position. So just one stop out, a few really good buys so far. Let's see if something else sets up. Man, it's just grinding higher. Had a small flag there. It broke out. coming down. So it should have some follow through here. Did not, saying I want to go higher. And you can use this tool. Like if you see something that looks really bearish, it should go down. If you see something that looks really bullish, it should go up. If it doesn't, it tells you something that should have happened didn't happen, and so there must be buyers in there. But now we had another big negative day. It should come down. It should break the 20. Let's see what happens. Okay, now this, oh, all right. I was going to say this is following through more. It is. All right, man. So it did not have that same kind of strong bounce that it had there. That is a big down day. I would say that this move is over just because this 20 MA has been what this whole stock has been riding up the whole time, and now it's coming down to the 50 and 65. And it's not even caring about those. Well, it cares about the 65, not anymore. All right. Now we're on the 10. That's a potential breakout you could have taken there. The market itself is kind of going sideways. All right, that had follow through. Very nice. All right, we got an earnings the next day. Did not like the earnings. So that's probably it. Let's see what those earnings were. That was in early this year, so early December. So it would have been these numbers here. Really did well, 5 cents, way over the negative 7 cents from the quarter in 2020. And man, look at revenue. Revenue is up 465%. We're almost to the present. That is the present. So, given what we know about it, you could trade this now. You kind of know the context. You know that it's had this massive run and it's kind of going sideways. Our earnings going to keep accelerating. Our earnings going to keep, going higher and higher. It really has the potential. It's at 5 cents. How easy would it be to get to 10 cents, to 15, to 20 cents? Same with revenue. It could grow to 10 million, to 20 million, to 30 million. So there's a lot of potential in this stock in the future. There was one day we wanted to look at 7/16/21. So we're going to do on demand, and I hope this EP would have worked. We'll see. So 7/16/21. I hope we're not lagging out here. No. 7/16/21. Okay, here we go. Yeah, so this was the day. Let's look at the 1 minute chart, and it's going to be kind of scary, but that's okay. So that looks really good. You could have taken the 1 minute opening range, and it would have worked. You'd have had this steep pullback to give you a second entry too. You could have taken the 1 minute, you could have taken the 5 minute, and it did not stop out. Let's go to the end of the day, or let's just go forward a couple hours and see what it does. I hope it works. So I think the biggest lesson from this I want to get across is that one thing I've been using a lot is when a stock is supposed to do something, when it's really bearish, when it's really bullish, it should follow through. And if it doesn't follow through, it tells you that it was just a trick. You know, it wasn't real. It was like getting stopped. It was like, just liquidity. It was getting stopped out. It was, it was market maker games. There wasn't really follow through from an institution there. Try this. Turn it off and on again. And this was one of the strongest stocks, and we got 3 really good trades out of it, I think, and 1 or 2 losers, one for sure loser. So yeah, I think this stock can actually teach you a lot just because of how much it ran, and it really never had like a really nice setup where you were like, oh yeah, that's pretty. Like we didn't really get a really beautiful flag. It was really choppy, and you kind of had to give it a couple tries before it would really follow through. So I don't think this is going to work. So I think we'll call it there at about 40 minutes. If you look at the hourly, this is only to 10:30, so the hourly is just kind of stuck. I was really trying to find out if it made new lows, if it violated this 317 and made new lows. Let's see if we could actually see on the daily chart if it did that. If my whole system isn't borked. My goodness. Yeah. That's too bad. This on-demand feature from Thinkorswim can be so cool, and it can also just do this. Maybe if we click a different stock, it will load that up. There we go. Okay. So that was this day. No. Which one was it? It was in here. It was this day, 7/16. Okay, let's look at this. So that was the earnings, and the low was 308, and we said the low was 316, I think. So that might have came and stopped you out, and you might have had to re-enter on that. Too bad, but that's why you re-enter. And those earnings were amazing, and it was an amazing jump. So why wouldn't you re-enter, right? Anyway, that's all for today. Thank you so much for tuning in. If you like this content, please subscribe. Please like it. Let your friends know. And thanks for being on this journey with me.